Hello and welcome everyone to the TwinRock Real Estate Liquidity Fund webinar. Thank you for taking time out of your busy day to be here. Please note that everyone's been muted for the time being. You'll see a Q&A tab at the bottom or top of your screen. Please feel free to submit questions throughout the presentation and I will answer them at the end. There's also a raise your hand button. During Q&A, you can hit that button and ask me an audio question. Just please note that all participants will hear you. Before we begin, I'd like to remind everyone that this presentation does provide forward-looking statements and represents TwinRock Partners' current expectations and forecasts. TwinRock does not guarantee any of these statements. So there are 5 main reasons to invest in the TwinRock Real Estate Liquidity Fund for you accredited investors, and 5 main reasons advisors for you to invest your clients. Today, my objective is to make you clear on what those 5 reasons are. So the first reason and one of the main objectives of the fund is to provide liquidity quicker than traditional alternative investments. So here's a simple illustration of the traditional trade-off between alternative investments and liquidity. Traditionally, specialized managers such as TwinRock Partners hold your money for a period of time they deem necessary to maximize value. This often results in higher returns, and in real estate, these can include CapEx projects, market forecasts, rent growth, and others. But because of this fact, there is less liquidity should circumstances arise and investors need cash for some other reason. So why liquidity matters? I want to tell you a quick story from my personal experience. Prior to working at TwinRock Partners, I worked for KBS Capital Markets Group. Our offerings included non-traded REITs and private equity instruments. During my 2.5 years, I had many conversations about liquidity with investors and advisors, but one stuck with me. After a series of back and forths with a client, he claimed, if I don't get this money, I could be living under a bridge. My only response was simple and unfortunate. I am sorry. Now, whether or not this client was actually headed for life under a bridge is not the point. The point is that TwinRock Partners is looking to solve the illiquidity problem in private placements and alternatives. So the avenues for liquidity in our new fund are twofold. First, the manager has the optionality of transitioning the LLC to a corporation and listing investors' interests on an exchange. That is our primary goal, and this could be achieved as quickly as 12 to 36 months from the close of fundraising. Once listed, positions must be held for 12 months, and then they can be traded freely. So that is our primary goal for liquidity in the fund. Hold your asset for 12 months regulatory period, and then free to trade and free to have liquidity in the fund. As long as TwinRock Liquidity Fund remains an LLC, the lockup period will still be dramatically reduced from most offerings of this type, and redemptions can be made after a 3-year lockup period and then redeemable with 12 months notice. So really a 4-year lock period. So that's the liquidity in the fund. Now I want to touch on our strategy. So our strategy is threefold. First, we're looking to invest primarily in triple net lease properties with WALTs of 8 years or more, so weighted average lease term of 8 years or more, with credit tenants in markets with solid growth potential. This will allow for steady income, minimal management, and protection from a potential recession. Second, we'll continue to leverage our deep relationships in multifamily in markets that we have a lot of experience. So those are primarily Oklahoma, Nevada, and Utah. And lastly, student housing. We have a lot of experience owning and operating student housing. And so if the right investment, if the right off-market opportunity presented itself, we may also look at student housing. I want to touch on some prospective properties that could be added to the fund, especially in that primary sector of triple net lease properties. So 1050 West Hampton and Inner Park are both opportunities that fit our criteria. They've got good credit tenants, the WALTs of 8 years or more, cash on cash return of 6% from year one. And in both cases, the equity needed is right in our range of around 10 to 15 million. Additionally, if you look at the markets that these two properties are in, for those of you that have been to Denver, Colorado, 1050 West Hampton is in Inglewood, which is near Greenwood Village, which Greenwood Village is a young and vibrant community. It's growing fast, and the surrounding neighborhoods are perfect for a rock climbing membership. So the main tenant at 1050 West Hampton is a really large rock climbing facility, and this property combined with the surrounding area makes it really attractive. You see there the IRR at sale and equity multiplier, those are based on a 10-year hold period, as are all of the prospective properties. Similarly for Inner Park, this is an opportunity in Broomfield, Colorado, which is in the corridor between Denver and Boulder. So those of you familiar with Boulder, Colorado, there's an explosion of tech right now in Boulder. And so that industrial absorption is moving down to areas like Broomfield. So we think that this asset is positioned really well. It's also near Flatirons Crossing Mall, which is another extremely vibrant, large mall, and about a 30-minute drive from Denver, Colorado. Additionally, these are two other prospective properties that fit our investment criteria. State Line Road, which is the opportunity in Kansas City, Missouri, and Roseville. These are both single tenants, and they're a bit larger opportunities. So I'm working with some larger family offices and even a sovereign wealth fund who have indicated potential interest as anchor investors. If we were to see a large influx of capital anywhere between 10 and 20 million, we might look at purchasing a larger triple net lease property like these two. So to move on from the strategy now, the fund is also seeded with properties, and it's seeded with two properties that are already owned and operated by TwinRock partners. So the first is the Row at Arkansas. This is an 80-unit, 320-bed student housing facility. Just want to run through some of the property highlights with you. So we had a minority interest in this property contributed to the fund, and we have investors who, like I mentioned in the beginning of this presentation, they need liquidity for one reason or another, and they have agreed that if the fund raises enough capital, they would sell their interest to the fund at a 30% discount to what it was appraised at earlier this year. So that's an immediate huge upside for the fund and its investors. Second would be the proximity of this facility to the University of Arkansas. So it's just a couple miles from the university. There's ample transportation to get there, including a bus line that goes right through the Row at Arkansas. And it's a perfect destination for sophomores, juniors, and seniors. Lastly, amenities and new development fueling faster rent growth. So a couple of the amenities of this property: private two-door garages, whirlpool tubs, if you remember being in college, private patios. And then, as I mentioned, continued development in the area. We're seeing higher rental growth than projected at a 3% per annum currently. And we feel that that is sustainable into the future. The IRR at sale and equity multiplier on this property are based off of an 8-year hold period. The second property that has been contributed is the Flats on May. This is a 192-unit multifamily unit property in Oklahoma City, Oklahoma. This property is also contributed to the fund at a favorable value to investors. So we had an offer to purchase this property at 5% above what it was appraised at when it entered the fund. And I should note, we have another multifamily property that's owned and operated by TwinRock in Oklahoma that was appraised at $21.5 million earlier this year. And we just sold that property for $27 million a few weeks ago. So that's a great success story, and we do see similar growth and similar potential for the flats on May. Second, for this property would be its proximity to new development. So it's in close proximity to a new Amazon fulfillment center that's bringing close to 1,500 jobs to the area, as well as its proximity to Oklahoma City Community College, Plaza Mayor Mall, Will Rogers World Airport, and the FAA Training Center. And then lastly, for this property, there's a lot of opportunity for CapEx improvements, which could drive rental prices up. So those include property rebranding, new monument sign, siding repairs, new exterior paint, new windows, excuse me, picnic and playground areas, new roofing, and exterior paving. And the IRR at sale and equity multiplier for this property were based off of a 6-year hold. So those are two properties that have already been contributed to the fund. It should be noted that as the fund grows, there is potential for at least 4 other properties that have similar upside to be added to the fund. The fourth reason to invest in the fund would be the TwinRock management team. So for some of you on the call, you're either prior investors or current investors in TwinRock Partners. And for that, we thank you. So this will come as somewhat of a review for you. For those that are not, I'd like to touch on the manager experience. So between Alex Phillips, he's our CEO, and Michael Meyer, he's our chairman, they have over 80 years of combined commercial real estate experience. They've been in the industry a really long time, and they founded TwinRock Partners in 2006. So they've been working with each other for quite a while as well. And their bios can be found in much of our marketing material, as well as on our website. Our current portfolio, so just a little background on TwinRock Partners. We were one of the first to break into the single family buy to rent market. We had 3 successful housing funds in California and Nevada, and we have 2 that have gone full cycle with IRRs of 21 and 22%. Additionally, this year we had a couple of dispositions of multifamily properties. Like I mentioned, we just closed and sold our largest multifamily property, Yaletown Apartments, a few weeks ago. And on that property, we're going to be able to return the 8% preferred return, as well as a substantial gain to investors. So after those housing funds, then we transitioned to purchasing multifamily and student housing in flyover states with good growth fundamentals. So Oklahoma, Arkansas, Missouri, and invested another 100 million plus of investor equity. So TwinRock Partners, we've always leveraged our ability to be nimble and invest in the right sectors. So that's our strategy for the triple net lease properties in TwinRock Real Estate Liquidity Fund, is to be adaptable. And we believe that that is the best sector to be in currently. Lastly, owner and operators. So TwinRock Partners, we have corporate offices here in California and Utah, as well as TwinRock Management employs around 50 employees throughout Oklahoma, Arkansas, and Missouri. So lastly, the last reason to invest in TwinRock Real Estate Liquidity Fund would be the transparency and the deal metrics we provide. So to touch on transparency first, unlike some other private placements or alternative investments, we plan to have the fund examined by an independent certified public accounting firm and a net asset value struck either after the 3-year hold period or when TwinRock Partners transitions from the LLC to a corporation. After we have that initial NAV struck, we will then provide quarterly NAV updates. So for those of you on the call that are advisors and wondering how you can work with TwinRock Partners, your fee would be assessed initially off the investment amount of your clients, and then we will have a net asset value struck down the road, and thereafter have quarterly NAV updates in our investor portal, which you can then run through your software and assess the proper fees. I also like to note that TwinRock has always been aligned with our investors in our preferred return and low asset management fees. So we have an 8% preferred return on this fund, inclusive of what we are anticipating as a cash on cash distribution of anywhere between 4 and 6%. So that 8% cumulative preferred return has always been a staple of TwinRock Partners. Additionally, our management fees are 50 basis point asset management fee only on invested assets, as well as a 1% acquisition and 1% disposition and refinancing fee. Lastly, in addition to contributing approximately $1 million to this fund, the managers have contributed their interest in our 2 seeded properties. So to recap, why should you invest in the TwinRock Real Estate Liquidity Fund? First would be the fund's ability to provide liquidity to investors quicker than traditional private placements. Second, the fund strategy to buy triple net lease properties, multifamily, and student housing. This strategy will offer a predictable cash flow, upside potential, and protection from a future downturn. Third, the fund is seeded with current assets already managed by TwinRock Partners and contributed at favorable values to investors. Fourth, the fund has a reputable management team and supported by ample investor testimonials, which can be found at the bottom of our homepage. Also important to note that because of our experience in real estate and our managers' experience in real estate, many of our investors are sophisticated real estate professionals. And lastly, like I just mentioned, the fund will have quarterly NAV updates, a low cost structure of 50 basis point asset management fee, and favorable investor splits with an 8% preferred return. So thank you everyone for being on the call. I'll now take question and answer, and we'll start with any audio questions. If you have an audio question, like I mentioned, there's a raise your hand button that you should see. Great, I'm not seeing any audio questions, so we'll move to the Q&A on the queue. Please feel free to submit questions now. No questions. Okay, well, it looks like there are no questions. So if you do want to discuss the strategy further or would like any additional marketing material, our pitch deck, our track record, or bios on the managers, please feel free to contact me at 949-356-6887, or you can email me at joe@trp-llc.com. Additionally, to invest in TwinRock Real Estate Liquidity Fund, you simply go to our investor portal, which can be found through our homepage, create an account, or for those of you that are current investors, log in to your account, and you'll see in our current offerings, TwinRock Real Estate Liquidity Fund is our only current offering. You click there, and in the top right-hand corner, you'll see an Invest Now button. It's a very simple process, 4-step process. You enter your investing entity, we verify that you're an accredited investor, and then we submit your funds. Thank you again, everyone, for taking time today to be with me, and we'll talk to you soon. Thank you.